Welcome everybody to sessions. This has been such a great road, actually, during these sessions. You guys are not normally seeing myself up here, but my counterpart, my better half, Kevin, he's going to go get a tan somewhere, so he's left me here to support you guys. And but I'm super excited about this conversation. Been a big fan of KCRise for quite some time, KCRise Fund. For quite some time. Darcy Howe sit on a board for Venture for America with me. And so when I seen that it was you, I was like, oh, I get to finally meet Ed. And just super excited. But if you don't mind, we're just going to jump right into it. All right. Just to kind of give you all a setting of this conversation, every month we do capital conversations with leaders in the risk management space, so that we can be able to give better insight to our startups and entrepreneurs who look into sessions and want to learn more about how to approach. And so these are just transparent conversations to kind of just get a better understanding and really kind of build community around this space. I think that's the biggest piece about it, is that sometimes it can be so uptight and so buttoned up that we lose the fact that we're actually people, right? And so this is our opportunity to kind of see the people behind these efforts and really get an understanding on the best approach, what to look for in the future, and so forth and so on. So super excited to have Ed here with KCRise Fund to kind of start that conversation. Ed, I'm just gonna start it off, man. Just tell us about a little bit about who you are, where you're from, and what got you in the space that you're in today.
Testing. All right. No, wow, I couldn't have said it better about what we do and why I love Kansas City and working in entrepreneurship. The way Craig put it on, hey, let's all do this together, and that's the premise of why our fund exists, is that we want to be making connections between people that maybe are, not only maybe they need a reason to get together, but a lot of them are heads down, entrepreneurs or people that are working their butts off 24/7, and it's hard for them to get away. So you want to show some value when they get together, which you guys definitely do here. Yeah, go ahead.
No, I was saying I appreciate that. Thank you.
yeah. And obviously thanks to everyone at Keystone for all the work you guys do, and Craig, VFA. We for anybody not familiar, I know you guys are in recruiting right now too, right?
Yeah.
The portfolio companies that we've invested have had a couple dozen VFA fellows, which are some of the smartest young people that I've ever met, and it's pretty cool. We can pull them into some pretty early stage companies and show them like great careers, and they add a ton of value. So big fan of VFA.
Thank you.
But yeah, no, I guess not to go to too personal or whatnot, but
no, we don't need the whole childhood story. Like you woke up one morning. No.
Well, my parents have some entrepreneurial roots to them. I was born in Ohio, born in Cincinnati actually, which is a VFA city, I think, and then but my parents were super young. They were in college, and didn't have much. Ended up having great careers themselves, but we grew up definitely in a modest household, and went and moved to Cleveland, which is another sort of like Rust Belt, kind of industrial, but a lot of hardworking people. Went through obviously a big change with like automotive moving out and steel moving out, and sort of had to reinvent itself. Get a lot of mistake by the lake jokes and all that. So, but it's a very cool town as well. A lot in similar to Kansas City, which is kind of why I really enjoy it. I'm glad I came to KC. But it's kind of a story of what, having to reinvent yourself as a city. I kind of saw that happen in the 90s and, when I was growing up there. And, I think it's very true that all comes from new companies being created, and people like one person raising their hand to start a company, or and then that becomes 200 or 1,000, and Cleveland's had some good tech exits as well. But on my story, went to school in Chicago, went to Loyola, which is small but a good school. didn't have much going on entrepreneurship wise. So I didn't really get into it right away, but did accounting and finance, which kind of helped for the investing, side of things later on. But it wasn't until grad school that I got into working with entrepreneurs and kind of found my calling. There was a 2014, 15 in Chicago was a really cool time. Groupon, which isn't as big anymore, but was the fastest growing company to reach $1 billion in revenue. Wow. Some of the people that I was going to school with were working there. The founders of that company taught a class where I did my MBA, and they just, now they're like rock stars, superstars, and it's like cool to see how quickly that all can happen. The VC world was starting, to be bigger in Chicago, but it was still mostly like grassroots, like angels and, sort of individuals backing these companies. I wish I would have put some money into some of those companies I saw speaking at events like this back then. But Grubhub was another that was founded in Chicago. Cool that we've invested in a deal with the VC that was the early investor in Grubhub. So just was hanging around the hoop, and like I said, coming to things like this, and just felt like, wow, these, I kind of wanted to get out of the big company accounting and finance. I worked for Ernst & Young and then a private equity firm before making the move to a venture firm in Chicago. So that was kind of the career arc, but it wasn't, it was definitely up and down. And I had a company that I was working for that ended up, sort of the owners of it got sideways and went separate ways, and sort of was the time for me to be like, I want to be on my, I need to be on the decision maker side of all this, and just kind of, working for people that were, maybe too financially focused, not enough culture focused, and wanted to join a company that, was all the opposite of that.
Tell us about that moment though. Like I'm gonna put my VFA hat on, just because we have so many fellows who want to walk through the VC space. They want to figure out how to become that person that owns their own fund. Well, first of all, through VFA, you're probably just going to be making slides and doing a little bit of data mining. You're not going to be running your own fund. But tell us about that moment when you realize, okay, this corporate space is not for me. I want to be on this other side of not decisions being told to me, but making decisions. Like how did that transition go for you, and what did it take for you to actually like fully walk into that space?
Yeah, great question. You can never like connect the dots. You can connect them backwards, but you never know kind of what, you just have to sort of trust your gut on like, and that's what's really cool about startups and VFA. Like you can, in these companies that we're working with now, you get to work directly with the owner. I mean, you're working, like you can pick the founder you want to work for, these visionaries, and like, but you get to work with them every day, versus the company I'm describing with like sort of a couple layers below. They certainly didn't have any interest in my career development. So, I mean, I think that's one factor of what you can look for. And I guess I kind of can fast forward to getting here and meeting my partner, Darcy Howe, who was the founder of our venture capital firm. She was also the complete opposite of all that, like very much like pay it forward. We're going to win together. We're going to win both in financial returns and helping create great jobs for the city. But we can be nice, we can be nice guys can win. And just talking to people around town. So the reason I'm here is my wife has Kansas City roots. She started bringing me here, and the firm I was with in Chicago had done 2 investments in Kansas City, 2 startup investments in Kansas City. So I got to know the market, knew that it was a place we wanted to live down the road, and thankfully met Darcy at the right time. And we can go more into that on how the firm.
That was a good segue, because that's where I was at. Like, so tell us about the beginnings of KCRise Fund or the fund itself, and how did it get started, or what was the emphasis of making KCRise what it is?
Yeah. I think it's important to note that we're on the same side as the entrepreneur, because we have to raise capital to be able to invest in startups. Like, and it's very hard. It can be tricky because the investors are investing before they can see anything. Like, there's no product, right? Yeah. Like, we're basically showing them a framework for the investments we want to find, but we haven't invested in anything when they commit to the company, which, at least in a startup, you're investing in a startup, you could see what they're building, you could play around with the software, whatnot. But that's what we had to do to start the firm. So Darcy was 30 years as a wealth manager. So she was in the financial markets. She had clients that had been with her. She'd helped their families. She'd gotten to know, help generational change within their families. A lot of them were entrepreneurs and sold their business. So she was very familiar with entrepreneurial, mentality and what goes on and she was also angel investing herself. So that's how it started. She basically said, angel investing is, it's not only fun and, you get to see some very cool things happening, but it can be a great part of your financial portfolio, right? It's like and again, we could talk more about this, but it's definitely like, it's an alternative asset. It's like when the public markets are volatile, maybe going down, this could be a place where you could basically make, like, it's like a defensive investment. If the economy's down, these could be great places to get in early and, diversify your portfolio.
I think I heard somebody tell me one time that the best angel investor is an investor that comes from a background of oil, because oil is so up and down and it's so risky to get into. So like that mindset that they have, they're already ready for the risk. So they're just like, let's go ahead and diversify this as much as we can and fail fast. Yeah. So yeah.
You definitely don't want your investor calling you every day.
right.
If you're going through the roller coaster of starting a company.
Yeah, this is not JG Whitworth.
But it's a lot of it's investor relations, mm-hmm. right? I mean, or like, just like an entrepreneur, like Darcy had to inspire people, like a call to action, almost like, let's invest all in one pool of capital so the angels don't have to go out and find every deal, mm-hmm. which is hard. And a lot of this is, it's private companies, so you kind of like have to know the right people who can tip you off that, hey, this company's getting started, they're raising capital. That might be the only time you ever had a shot to get in. Mm-hmm. So you kind of have to be, hanging around the right networks. But it's also like very, it's not inclusive, right? Yeah, and that's maybe, how it was in a lot of these cities like Cleveland and Cincinnati and KC. Like, the people with wealth sort of had the market cornered on getting the chance to invest in the best startups. And so what we can do with the fund is sort of democratize it more and have, okay, come one, come all into the fund. Everybody has a day job. Like, you don't have time to be like diligencing these startup investments, or again, like even getting access to find them. Come into the fund, you'll get a piece of 20 local startups, and mm-hmm. you can, in some cases, you can. We offer opportunities for they can like double down, like invest directly in the company if there's that opportunity. But for the most part, you get like an even piece of 20 companies. Some of them go up, some of them go down. Hopefully, overall, it goes up it's
kind of a more risky 401k plan, huh?
It's a little risky. Yeah. I mean, we should start with that too. Like, what are the stats you've heard lately on how many startups, don't make it? But again, as we've seen a lot just in KC, the outcomes can be really big and it can be really fast. And and what I love about it is like young people who work for these companies, and a lot of the entrepreneurs themselves are very young, like can make life-changing, generational wealth by being a part of these companies. It's just not something you can get by owning a little bit of stock if you work for a big public company.
Yeah, I think even just recently we had RX Solutions. They are going through an exit. RX Savings. They are going through an exit of like $850 million, if I'm not mistaken. Yeah. So when you hear those big numbers, and then like you see KCRise just closed Fund 2 with $41 million. Like, those are some really big numbers, so it attracts a lot of people. But I think in our last capital conversation, the feature at the time said, my goal is to say no, like, because there are so many applications that I get. Like, I'm trying to find that yes, so I'm trying to say no as fast as possible because I have to burn through them. It might not be your philosophy.
Oh yeah, I was like,
no, it's not your philosophy. But this is what I heard. But I guess the point that
the industry is.
I guess what I'm trying to get to is what is the focus of KCRise? Because I feel like every fund that's out there has a specific focus. They have who they're looking for. So what is it that you all are looking for, and what would you tell a founder who's exploring their options and looking at KCRise as a potential match?
Yeah, great. I mean, that's what we should be talking the most about because we're here again to be the place where entrepreneurs can come, a friendly ear, even if it's the earliest days of the company. And you're maybe looking for the first friends and family dollars. Like, we still want to be able to lend some advice where we can. But for us, again, we're relatively new at this. This is about as risky as any asset, maybe other than oil. And but we had to start dip our toe in the water. So we invest when there's another venture capital fund leading the deal. And typically those come from out of town. They're very deep in the industry that they're, exploring this deal in. We try to know a little bit about a lot of industries, but we're really focused on software because those are the companies that are most conducive to venture investments. They can scale very quickly. They can do it a lot of times, without having to spend a lot of capital or you have to hire thousands of people. We want them to hire a lot of people, but typically if you're in a high growth situation, you want to have high margins and have things mostly automated and not need a ton of salespeople either. So that's what we're looking for. But the industries can be anything, and I think we've learned a lot about what KC as a market is really great at as we've gone along here. What I was going to mention about sort of like going slow at first, we sort of invested in more Series A to maybe B stage companies in the first fund, which for those that are curious, like, that's more when you probably have product market fit, which is where you're probably making $1 million to $2 to $5 million of revenue at that point. Like, it's not the earliest stages, and it's also not probably where the market needs us the most. So, but we wanted our investors to have a good experience in the first fund. So we were in a mix of some later stage, some earlier stage companies. But now as we go into fund 2 and 3, we really want to be a place that's an organized place for the seed stage, and now even considered pre-seed stage entrepreneurs to come. We still want another venture capital fund to be invested in the round, leading the round and doing all the legal and accounting, market diligence. But a lot of times we're actually now like making that introduction because we've known a founder since the day they started the company, or maybe they're an alumni of another company we invested in an earlier fund, right? So that's what I personally get very excited about when, again, we get told no a ton when we're trying to raise money for the fund. We get told no a ton when we're trying to introduce local companies to an Austin or a LA based VC. But when you do get a yes, and it becomes like a sort of a life-changing event for the entrepreneur to land a lead investor that they might not have known otherwise. And then we really like to be the second biggest check in the deal. Like, that's kind of what we're going for now. And that's kind of what we feel like the market needs the most. But I still never answered your original question.
No, you're fine.
We definitely like healthcare technology, given the roots of Kansas City, so many great assets there. But also it's like the biggest market you can, and it's very I don't know what the right word is, but needs improvement in a lot of ways.
It's evolving.
Yes, that's great. to serve patients better, right? I mean,
Yeah.
it's like almost every corner there's some inefficiency that's can be improved to help people, on all fronts, like get better access to care, get better access to food, they need if they're on a specialty diet. That was one of our latest investments, or just telehealth, mental health. These are things that are like still in their infancy, that we really want to be, they're obviously like good for the world, but there's still a lot of upside. Supply chain and logistics, something you probably hear a lot about in Kansas City. That's where we've probably done our most investments. Government tech, digital companies that serve the government is something we've done a lot more, probably more than most venture capital funds. Again, just great large and medium-sized companies in Kansas City that have a lot of talent in that space. And then, of course, like education could be one that, again, is sort of broken and needs more innovators.
Yeah,
but,
for sure.
But yeah, those are kind of the ones we center around.
Love it. And I'm gonna shout out a couple of those that I feel like fit into those mix. So like Doppler is definitely one that kind of comes to mind when you talk about GovTech, and Super Dispatch, if I'm not mistaken, Backlot Cars, supply chain, Backlot Cars.
Pay It was the big.
Oh yeah, the big exit. Yeah.
GovTech win, but yeah, no, good names.
Love it. One that I was kind of surprised though was Crypto Slam, and that was super interesting. Like tell us about that deal and how that went about.
Oh yeah, oh, man, what a year in that world. It's again we're well. I another, just to answer your question on like what helps get a company funded, or what makes a founder attractive to a venture capital firm. It's like when it's their life's work, right? Yeah. And again, in a space like this, which is emerging. This company Crypto Slam is basically a pricing, is like an index for digital assets. So the most famous, they want to be the Google of digital assets. So it's an ambitious play, but the most sort of well-known example are like digital art, NFTs, and at the very infancy of that, the collectibles, digital collectibles phase is where this entrepreneur was, kind of one of the earliest adopters, and did it because he was a collectibles fanatic in the 80s and 90s, and his childhood kept, followed it through his whole career. But his career was in finance, accounting background. Actually, I think he started at Ernst & Young too, which I feel connection to him, but it was his side passion, which he started a company, was pricing, essentially the early days of NFTs, one being NBA Top Shot. I don't know if you own any.
I don't.
Those.
I'm so scared of the blockchain and NFTs. My wife, she handles my checkbook, so for her to see crypto anything come across, I'm not ready for that conversation yet. But I know all about it though.
Very fair. I'm the same. But you've got this story where Mark Cuban is sort of the NBA Top Shot at advocate, and just sort of like a emerging technology advocate. But like he reaches out to the founder of Crypto Slam on Twitter and says, "Hey, I've been using your platform. It's the only thing out there." And of course, like, those markets have a lot of inefficiency in them too, right? So he's basically a user and wants to become an investor in the company, which is, that doesn't always how it happens, but when you've got a guy whose passion is just coming through and he's like building something of use for a big market, we just don't know how big this market's going to be. That's pretty cool, right? Yeah. So we love those stories, and we didn't know about that. I mean, this was, again, talking about like why having a lot of investors in KCRise Fund has been a real positive for us. Is one of our individual investors has been friends with the founder, Randy, for 20 years, worked with him. They both went to Notre Dame. Like, they have all this, like, he's a very trusted person. He tipped us off about this deal when the Mark Cuban thing came in, because he was an early angel. And I, you know, again, it's like, we wouldn't have probably known about that. This guy was basically building this company, you know, in his basement. But because we have like all of these sort of advocates around town, like we got a note that, hey, like this could be a good time to join with this. And then fast forward, like they got one of the biggest gaming companies in the world to lead the round. But we actually, you know, were in before that happened and helped the founder sort of navigate all of that, because it got real crazy in about first quarter of this year.
And I want to go into that. Like, what is first of all, there's one thing that happens here at Sessions is that the CAPS high school program comes to our sessions to check off their networking box. And so I'm not going to point you all out, but they're here. And the thing that you highlighted was relationships, right? And so being able to I want them to understand that the exercise of going to network, going to go talk to people, going to meet people, you never know what situation that relationship can really put you in. So for you all out there that's in the CAPS program, it's really good that you guys are doing what you guys are doing.
The best advice.
But I want to go into, you say that you were in on that fund a little bit early and you kind of helped them navigate that space. So what are some things that a founder can look forward to outside of fund? I know everybody wants that check, and we're going to talk about what that check size could possibly be from you all as well. But besides that check, what are some other supports that you all can provide for a founder?
Yeah. And I guess first of all, how many entrepreneurs are in the room? All right. Yeah. Awesome. Well, I'd love to know what the entrepreneurs need. So maybe we could do a little Q&A. Right.
Oh yeah. I got y'all.
All right, cool.
Matter of fact, while you talk, I'm gonna go pull something up real quick. Go ahead.
All right, nice. But again, we're relatively new at this, a couple of years in, and the things that we've found can be the most helpful, especially in one market where all of our companies are here, all of our investors are here. The number one thing is for us has been introduction to talent, because there's all this interest of, you know, people either graduating college or they're working for big companies here that have a curiosity about working for startups, but it's really hard to, you know, a lot of the jobs aren't posted, right? It's just this Crypto Slam company, a good example, like added probably 20 people in a couple weeks, you know, right after they got that funding. So we can make those talent connections that like a VC who might be in another city, you know, can't. They just don't know the top to bottom talent market.
Shout out to VFA.
VFA, right. You guys, it seems like the fellows have been all at the good companies too.
right.
And we had a fellow work for us for a little while, Chad Feather.
Yeah.
So yeah, Chad's doing great things at Doppler. But yeah, I mean that's the one thing, because, and again, like founders are doing 1,000 other different things. Like they can't sort through resumes or like post like a, you know, whatever it might be, customer success or product role. Like we can help them at least fill the candidate, you know, pre-vet some of the candidates for those kind of things. Okay. That's really fun. That we've done about 50 of those since we started the fund, like where we made the placement, or, you know, we introduced a talent to a company and then they were hired. So that's been cool. The other thing is capital introductions, because you're always looking for sort of right when you close. This is another thing that's like kind of, can be, it's something that founders struggle with. Okay, you know, you spend 9 months or whatever raising your seed round, and then you pretty much need to start raising the Series A round, or, you know, start networking
immediately.
Really, yeah, because the best time to raise capital is when you don't need it. So, that's what we help with too. You know, those are people, and me especially, when I joined with Darcy, like that was the thing I spent the most time on, was just getting Kansas City's name out there to VCs around the country. Knew a lot of them in Chicago, so that was a good place to start. And we've done more investments with Chicago firms than any other, so kind of than any other market. But you know, my colleague Liam in the crowd here was crunching some numbers. We've actually had more from the East Coast than the West Coast come in over the past, was it 24 months or something, which was surprising to us too. So the dollars are coming from all over, and we want to help the founders spend the least amount of their time raising the capital. So those two things. But yeah, I'd be curious to know what entrepreneurs feel like they could use help from their investors on.
Yeah, so we last week we introduced a new feature to sessions. It's called Thought Exchange, and so Thought Exchange is a way for us to engage with you all as we're having these conversations. And the question that we have on here is, what are the hurdles for startups from getting funded in Kansas City? And I think in a way we can get that question answered for you. And so if you guys pull up your phone, scan that QR code, you'll be able to kind of see those thoughts going, and then we'll have those reflected next week on what those answers look like, and we'll get that to you as well, so you can get some insight.
Yeah, probably the other thing I can mention on maybe how we can help maybe more than out of town investors is customer connections. Like, and we try to network as much as we can with people who will buy software at the big companies in town, because there's no better place than like down the street to work with a company that can maybe like solve a big problem for your a department of your company. And maybe the one example I'll give is we've made a lot of investments in human resources technology, like platforms for benefits or for communications within a company, and that's easy because like every company has a head of people or benefits or HR. And so when we make an investment in that area, like, or before we even make an investment in that area, we can kind of survey a bunch of the human resources leaders in town on like, hey, is this something you would buy? Is it something there's 1,000 competitors of, or is it something unique? Would you pilot this? So that's, again, that's another thing that
I love it.
We try to help with.
I love it. So what do you feel like is that sweet spot when it comes to check size, right? You want to be, as you're approaching the pitch, and we're going to talk about how do we get to that pitch space too, though. But as you're approaching the pitch and you're going for that ask, what is that good sweet spot that a founder should be looking for when they come to KCRise to be thoughtful of? Did you guys already close your third round?
We're raising it now,
okay,
and we are more than halfway to our goal. So
okay.
it's going. But it's a grind.
Right. Yep. So I mean,
but yeah, our next investments that we make will be out of the new fund.
Okay.
So we're excited about that.
Awesome. So what does that check size look like when they're coming to you to present?
Yeah, it's something that we're flexible on, but we do like to keep keep consistent where we can, keep a consistent messaging. Again, so at this pre-seed and seed level, we're investing in total rounds that are usually about $1.5 million to $3 million, maybe some maybe smaller. So when you think about that, there's usually a couple funds and a couple angel investors in these rounds. So the lead is usually around half or maybe a little bit less than half. So we're typically around 20-25% of a round. Okay. So kind of the math kind of works backwards a little bit, but our average initial investment is somewhere in the 300 to 500 range. And what's unique about us is we really like to reserve. So you think $40 million fund, we're only doing 500K first checks. We have a lot, and we do about 20 investments per fund. So we have a lot reserved for the future rounds. And that's where we can also like really take the load off of a founder as they get, sort of going for their Series A or Series B. Like we can play a big part of that round as well. But yeah, the answer is like, typically if the entrepreneurs out there are raising like a first round, a pre-seed round, like about $1 million is a good place to be. There's a lot of funders in that range, and that'll get you 12 to 18 months of runway usually. So if you're raising $100,000 or something, you have to know how to spend it. I mean, you have to have a plan for the VC on where to spend it. But if you're raising, 100 or 200,000, it may be harder to get, a couple of institutional, venture firms in. So that might be a better round to raise from individuals. If that makes sense.
Yeah, it does. And I'm trying to make sure I get all the answers right. So you guys don't like being the first. So if the first is about 50%, then if you think about it from a strategic spot, then you should be looking at least 25, maybe 30% if you're going after KCRise Fund in your overall seed round.
There you go.
Okay.
Yeah.
Okay.
I think some deals obviously have just one investor, and that's a little bit more more common in the private equity stages, like later stages. We like to say this is a team sport, so you don't want to have like 1,000 investors, but if the more the better usually, because everybody has their own. All the investors have their own networks and expertises, and if you can get 3 or 4 funds, and that's great. I mean, the good thing about having funds in your company is that's what they do full time. That's the angel community has been great locally and in a lot of markets, but they usually have another full-time job, and they're usually in 10 or 20 companies aside from yours, say so. So having some professional venture investors and a couple different firms is something we recommend to companies.
Okay. What is the biggest mistake that you see entrepreneurs make when they're seeking institutional capital?
I mean, it's one of the hardest things to do, right? Is to like convince somebody to back you, pretty much for just your vision and maybe a couple early data points or a customer or two. So I think the mistake is maybe not planning ahead enough, or coming out with your plans to raise a round without having done any sort of pre-networking or really thought hard about like where's my place in the market, nationally, and do I have a lot of competitors? Like, do I have some sort of moat? A moat kind of saying like, oh, I have like a competitive advantage, surrounding my company or my angle on the market.
Right.
So I don't know. I'd say that's the first mistake. Is like they think it's going to happen too quickly. This. Oh, we lost.
Happened? Yeah, I lost my connection. I'll get it back up. I promise.
But I would say, the other thing is like, people don't leverage, like a lot of investors for our fund as well, like come from a recommendation from somebody else, right? So if and this is probably true for anything in life or your career, like other people can open so many doors for you. And for an entrepreneur, if you're raising capital, come with like really good materials that can be forwarded on, like with something catchy about your company, a couple bullet points, something, a deck or a one-pager that's like really easy to read, and let other people pass it around for you. That would be my advice. Like, and if somebody offers to make some introductions, like follow up like that day, because it's top of mind for them, but make it easy for them to share, with others, and like get others' takes. And, then all of a sudden, like one investor could be 4, all of a sudden. I would say, that's something that seems easy in practice, but again, if you're looking for a new job, it's the same thing. Like, make it easy for people to recommend you, and like do it timely.
So preparation is key. I think my grandfather used to say, you got to stay ready so you don't have to get ready. So if you stay ready, then you'll be all right.
Yeah. I mean, I know email's kind of like maybe dying in some circles, but it's still pretty much the best way to, raise capital. And hey, I mean, like the other cool thing is COVID allowed companies to raise money over Zoom, like very regularly. So, take advantage of that. I mean, just build a pipeline, get your name out there, have other people recommend you, and then, just be willing to meet a lot of people, and just kind of be honest. I think that's the other thing. It's like, if there's things that you're covering up, or not fully giving a full picture, it's going to come out at some point. So
Yeah.
there's a lot, just again, these early stage companies, it's a lot about trust, because there's just not much there yet, for investors to analyze. So just, come across genuine, and don't try to oversell.
Love it. So we're going to end with just one final question. What excites you about Kansas City when it comes to innovation-led and venture-backable startups? Like, what do you see on the horizon, and what are you getting excited for?
Yeah, well, going back to your first question, like, I just think this is one of the most welcoming places. Like, I'm not from here. Basically, I've only been here 4 years, and I feel very welcomed, and like supported by people from all corners of the city. So like, I think somehow we've got to make that more public, right? Whether you're from here and you went and built a career somewhere else and you're coming back, whether you're brand new, whether you're an entrepreneur, who is new to the capital markets in town, like it's something special here, like very, very welcoming, helpful, friendly. So I think that excites me about KC as we get sort of get more momentum, especially with people in the tech sector moving here. Again, I don't have the numbers yet, but it just had that feel that people were moving from bigger markets in COVID and over the last couple of years, because they saw opportunity here, not just because it was time to move back home or somewhere smaller. But on the early stage funding side, I'm just excited that, like, again, the RX Savings, the Backlot Cars, the Pay It's of the world, like, a lot of young, hungry people built those companies, worked for those companies, still have many more shots on goal, know how the early stage growth and funding all happens. So they're going to do it even better the next time, or they're going to do it on their own. And like, so the opportunities are sort of endless for us to see, new entrepreneurs to back. It's cheaper than ever to start a software company. So most people that are have experience with it a little bit, I think are going to do amazing things the second, third time around.